Hello everybody, my name is Kiana Danielle. I'm the CEO of Investiva, and today we're going to talk about how to trade the British pound, the sterling, in case of a Brexit. Thank you everybody for joining us. First, I want to do a quick mic check to see everybody can hear me properly and that everybody can see the screen. Could you please type in a Y for yes if you can hear me? And type in a Y for yes if you can see my screen. Thank you everybody for your interaction and collaboration. This is a live webinar, so please do write any questions that you might have, any comments, and I am going to ask you questions during the webinar as well. So we only have 1 hour and I'm going to try to put as much possible about Brexit. So a little bit about me. Well, this is how I look like. It's always good to put a face to the name, right? And so without further ado, let's jump in and see what we are expecting to happen in case of a Brexit. For those of you who don't know what a Brexit is a combination of words Britain and exit, and it means Britain exiting the European Union. Right now, the United Kingdom does have a kind of a weird relationship with the European Union to begin with, but they are trying to go solo completely, and they are going to have a referendum on June 23rd to see how many of British people will vote for Britain to get out of the EU. And first of all, if we have anybody from the Brussels area, I want to send our condolences if you were affected. And our prayers are always with you guys. And the one thing that the Brussels bombing did 2 days ago, unfortunately, it did increase the risk of a Brexit. So now we can see there has been even more volatility in the anticipation of Brexit, because one of the main reasons why the British people want to get out of the EU is actually borders and safety. So we are going to today talk about the British pound, but first and foremost, we need to understand the fundamentals of a Brexit. So the first question is that why are there talks about a Brexit? And as I said, one of the main reasons why is because of safety and borders, also economic reasons. A lot of British people think they can do better alone, and they also think that the European Union benefits more from the UK than the UK from the EU. And also, obviously, economic problems with some of the members of the European Union, such as Greece, has not made the European membership any more appealing either. And of course, let alone the horrible terror attacks which have been taking place in France and Brussels, and it might even continue to go on. So that is when, the Brexit talks got very heated back in February, and on February 20th, David Cameron, Britain's Prime Minister, set June 23rd as the date for a referendum on Brexit, and several recent polls have shown small majorities in favor of a Brexit at the referendum. So let's see who is in favor of a Brexit, who is supporting. They call it the Leave group. The Leave group mostly include people who are worried about immigration and border control. And the poll suggests that the public is overwhelmingly sympathetic to the idea that Britain needs to restrict immigration. And some of the slogans of the Leave group have are control our borders, make our own laws, get our money back from Brussels. And these are just a few of the Brexit 2016 campaign slogans. And the high levels of immigration and fear of terrorism has increased the temptation of the Leave group, right? And on the other hand, there are some international countries who also support Brexit. And mostly they are those who'd like to see a dissolution of the European Union itself. Then they believe, rightfully so I believe, that the UK leaving the EU would create a dissolution momentum, and if a Brexit happens in June 23rd, we could see other countries starting to leave as well. Probably Germany would be next, and that can really hurt the European Union, and we could see a lot more volatility and eventually a complete collapse of the European Union. Some of these international supporters include Russia, Vladimir Putin, and the far-right French National Front leader Marine Le Pen. And so these people are not really supporting a European Union as a whole, probably for economic and political reasons. Now let's talk about who is not supporting a Brexit, who does not fancy a Brexit. First and foremost, the number one Brexit opposition would be the majority of UK's top businesses, because obviously, as we're going to talk about it a little bit more later on, the CEOs of massive international businesses that are located in the UK fear a disastrous consequences and an economic shock that could lower their profit. Nobody wants that. The FTSE 100 is also one of the biggest, one of the large oppositions. They wrote a pro-EU letter, and they signed it by over 1/3 of the heads of the FTSE. The City of London in general largely is in favor of staying in the EU, probably because it is the financial headquarters of the UK. And internationally, the United States is one of the largest allies of EU in staying in the European Union, and that is why President Obama might go to the UK and endorse a EU membership because, well, apparently Obama is pretty popular in the UK anyway, and people might actually take his word, and those who are confused and don't know what to vote for on June 23rd might convert to a Brexit opposition. So these are the people, and the why and the who, right? So next, we're going to talk about the big deal. How could a Brexit impact UK's economy? Why is that important for our forex trading? Because economy is the main force behind forex currency fluctuations. And the things that we follow fundamentally in the British pound are going to be those items in focus right now. There are, again, a doomsday group and people who are supporting the UK, giving us so many different scenarios of what could happen in the UK in terms of a Brexit. Some of the negative analysis and people who are very scared of a Brexit in terms of jobs, they say that leaving the EU could cost 950,000 jobs, almost 1 million jobs by 2020, just because the UK left the EU. And in terms of GDP, that is actually one of the biggest fears. some analysts, including the Confederation of British Industry, it's called CBI, forecasts that a Brexit in 2016 could cost the UK as much as £100 billion, the equivalent of around 5% of the GDP by 2020. So I mean, in terms of a shock, there obviously is going to be a shock. And so whether the Brexit happens or not, we can certainly expect a ton of volatility around June 23rd. So what we're trying to do here in terms of a Forex trading scenario, we have three options. We can focus on trading the British pound before the referendum. Second option is to day trade it on the day of the referendum. And third choice is trading it afterwards, after the results are out. And I'm going to cover them all based on what we know today. Of course, things can change. So these are, especially for after a referendum, this is going to be a little bit of a longer term forecast. But based on what we know today and based on the market sentiment, I have made some assumptions and an analysis that I am going to share with you shortly. So with jobs and GDP, the majority of people are very fearful. With the housing market, some people believe that a Brexit wouldn't really hurt the housing market, and the housing market does affect the currency market. And the reason why these brokers and and the analysts believe that housing market won't change much in case of a Brexit is because they think that the Brexit makes no difference to the average man on the street. Whether you want to move house or have another child makes no difference if you're in the Europe or not in the Europe. Obviously, if you're a British, probably that can make a difference than if you're Italian and living in the UK. But the majority of the UK, according to this argument, wouldn't change as much. But the argument is obviously very heated, and based on interviews with businesses, trade associations, and additional research, we can look at 8 of the UK's key exporting sectors, and so the assessment shows that a risk of disruption to some of the trade sectors are pretty high. Those sectors include cars, chemicals, aerospace, food and beverages, and financial services. Risk of disruption in case of a Brexit is kind of medium in professional services, insurance, and machinery. And these obviously will also affect the European Union by the same level. So not only the UK economy will be impacted, but also the European Union, and of course the euro could be affected as well. So these are all things that you want to keep in mind in case of a Brexit. So now let's get down to the reason why we're all here. We want to know, how could the British pound react to a Brexit? I call it Mr. British Pound because that is how we've been calling them at the Investiva Forex Coffee Break education course. The reason why, for those of you who don't know me, is because we believe that the currencies, I mean, not believe, but a metaphor that I use for beginners to make currency trading more fun is that the reason why currencies come in pairs is because it's a couple. So British pound versus the euro is Mr. British Pound versus Ms. Euro dancing on the Forex dance floor. And as they move up and down, we make bets on which one is going to screw up next. That is the Investiva methodology that you might want to get acquainted with. So back to business. How could British pound react to a Brexit in 2016? The key here is uncertainty. Before the referendum, that is what you want to focus on. And who can tell me what uncertainty does to the markets? What is the first word that comes to your mind when we talk about uncertainty? Some of the answers: fear, yes, of course. Yes, fear is right. What else? Risk, absolutely. Very good answer. So just to get on the risk, what will risk bring on to the markets? How does risk affect the movements of the prices? Yep, that's correct. It's volatility. It makes the prices more volatile. And when there is fear, more fear than, like, the fear factor of that uncertainty is larger, normally the volatility and the pressure could be to the downside. Yes, I want an interactive webinar here, otherwise it will look like I'm talking to myself, and I do not like that. Please do use your chat and don't check your Facebook as I'm talking, because then it will not really help you with your trading strategies. I know it can be very easy to be on Facebook while listening to a webinar. So yes, the key here is uncertainty, and the uncertainty will bring and is bringing a ton of volatility, especially since February, when the Brexit talks got very heated. Just so you know, the Brexit talk has been going on for a while. Britain has never been really in favor of being in the EU anyway, but February was when it got really heated up. So no one really basically knows how a Brexit would eventually turn out. And I mean, it's just like Trump here in the United States running for president. At the beginning, everybody thought it was a big joke, but now he turns out to be the front runner, and nobody really knows why. And the same case with Brexit. At the beginning, people were just like, yeah, we don't want to be on EU, and nobody really thought that there was going to be an action on it. But now we're seeing that, oh, this is serious and there is no joke, and this might actually happen, and some might, and the British people might actually vote British out of the EU. Today, do we have anybody from the UK in our members? Because that would be awkward. All right. Okay, it seems like we don't have anybody from the UK today. So the anticipation, as I said, has made it incredibly volatile, and that means that the British pound has been under pressure, and we have been seeing the British pound falling down. So as I said, today we're going to analyze a strategy and come up with a strategy for 3 different sessions, 3 different segments. One is before the referendum happens. It's in 3 months' time. And as we already covered, we are going to have a ton of uncertainty until June 23rd, and that could really affect the British pound negatively, meaning it can get weaker and weaker. We are going to expect more and more volatility, but the majority long-term pressure could be on the downside, and it has been in the downside since the Brexit talks really started. One thing to remember, even though we're seeing right now the British pound dropping, it really can only be attributed, one of the main reasons why is the Brexit talks, because if you look at the UK economy as it is right now, they're doing okay. Their GDP has been growing, their jobs has been growing, and 2 major, let's say, besides Brexit, the other reason why the British pound kind of lost its upward momentum was the fact that David Cameron stopped talking about an interest rate hike for the UK um, right before the Fed in the US increased their interest rates back in December. Even the UK was talking about an interest rate hike, and that is the reason why around here, this is right before, right around the time that we were talking about an interest rate hike, and also over here we were seeing a British pound strength. And well, this one is British pound versus the USD. So the main leader in this one could be the US dollar. But when you look at the pound yen chart, you can see that the pound was pretty much on an upbeat movement, and it was going up and up and up until David Cameron removed his vocabulary of increasing interest rates, and the Brexit talks started to come up, and that is when we saw a downward momentum. So going back to British pound, because we're talking about, well, we want to talk about British pound crosses, and for those who are new here, currency pairs come in pairs, and when you're looking at their movements, you have to consider both currencies in the pair. Today we're talking about British pound, but the US dollar also can majorly attribute, and we want to see who is the lead in this pair. Again, because the British pound is quoted first in this currency pair, that means for a bullish scenario, we would want a strong British pound and a weak US dollar. Alternatively, for a bearish scenario, you can actually write this down, we would want a weak British pound combined with a strong US dollar. When we get to pound-yen pair, again, the British pound is quoted first. For a bullish scenario, what do we want the British pound to be? Do we want it to be strong or weak? For a bullish scenario, that's correct. We want the British pound to be strong and the Japanese yen to be weak. That's correct. Thank you, Melissa. And alternatively, for a bearish scenario, we want the British pound to be at risk, like it is right now, and the Japanese yen to be strong. So starting with British pound on the longer term overview, you can see that this is actually one of the important things that you need to know about the British pound versus the US dollar, is that in the old time of the charted pound dollar forex analysis, it has never broken below the 139 level. And the lowest it has gone has been 135, but it just merely tested it, went back up, tested it again, and bam, it went back up. This time again, right in February, we had the pair reaching this level, and this is a very, very strong barrier for this pair. So this is one thing that you really need to keep in mind if you're considering trading or investing in the pound-dollar pair, is that you want to keep an eye on this level. Right now, in the past 2 months, the pair was not able to break above this level, but as the Brexit talks get closer and closer, there is a possibility that we see the pair breaking below this level, and that, my friend, is going to be very disastrous for the pair, because that could open doors for further drops. So again, back to the first scenario of what to do before the referendum. As I said, I believe that the scenario is going to be on the downside. We're going to do a little bit more market sentiment analysis after this, but for now, for a long-term investor who wants to be in a trade for 3 to 6 months, until June 13th, you might want to expect a downward pressure, especially now that we've bounced back up to 146 and it's going back down. This could be a good time to get into a bearish position in the pound dollar pair. Right, that is, again, we're talking about pound by itself, and we want the British pound to get weaker and be volatile, and we want the US dollar to be strong. If something disastrous happens to the US economy in this 3 months and makes the US dollar weak, then this strategy that I just mentioned might not work. So even though today we're only talking about the British pound, you have to keep an eye on the US economy as well. Forex trading is a very serious business, as you can see. With pound, I'm sorry, what did I do? Right, hold on one second. Okay, there you go. So with pound yen, so now the difference between Japanese yen and the US dollar is that the Japanese yen on its own normally is in the range zone until something massive happens. So the Japanese yen, when something surprising hasn't happened, normally the lead in the pair is British pound, and that is why you can see the British pound movements a little bit more vividly in the pound yen pair, and the drop has been very vivid as well. So the points that I want you to keep an eye on when it comes to pound yen before the June 23rd is, first of all, this 50% Fibonacci level that also coincides with a high of back in 2009. And currently the pair is testing this level. So 158 is a very important level. The pair was not able to break below it, and we saw a little bit of a pullback this month. This is the monthly chart. We had a 3 black crows. Everybody familiar with the 3 black crow chart pattern? If not, I'm going to explain it briefly. A 3 black crow chart pattern is when we have 3 very long bearish candlesticks, and normally I actually had identified this 3 black crows last month, and we expect a bit of a correction after it appears. It goes along with our Fibonacci and Elliott wave analysis. So based on that, this month, technically speaking, we saw a little bit of a pullback. Fundamentally, it's because Brexit talks a little bit cooled down a little bit. In February, we saw this massive drop. It was because we were seeing a lot of talks about Brexit, which really put the British pound under pressure. So what I believe is going to happen is that the next level that you want to keep an eye on is the next Fibonacci level of 38% and is the 165. One other thing that you need to keep an eye on is the Ichimoku cloud. The pair has not yet broken below the Ichimoku cloud, and that means that we could see a little bit of more up moves for the next month or so. And right before the referendum happens in June, so let's say in May, we are going to see a little more downward pressure on the British pound. Then again, we are talking about the British pound on its own, and we're assuming that the Japanese yen is going to remain either neutral or strong. That could really strengthen our bearish scenario for a pound yen. If even the Brexit talks really heats up and put a downward pressure on the British pound, but the Japanese yen suddenly gets very weak as well, that is when the scenario might not work as well as I'm talking about. Again, it is very important to keep an eye on all of these situations. So this was the long-term scenario before the referendum. I am going to talk about the during and after the referendum in a little bit, but first let's also take a look at the British pound market sentiment today to see what we could do even today. Please excuse my PowerPoint. All right, there we go. Can everybody see the chart over here? Okay, great, thank you. So this is the daily chart of a pound yen. The daily chart breaks down the sessions into daily candlesticks. So that's why we're zoomed in the currency pairs movements. And, oh, I'm sorry, this is the monthly. The daily chart is this one. All right. So we went from the monthly to daily, and the current market sentiment, the reason why we zoom out is because we want to know what the current market sentiment is. Based on the candlestick that you see, what is today's market sentiment? Is it bearish or is it bullish? All right, I'm going to ask Stephanie, is today's market sentiment bearish? It's bearish. Very good. So yes, we know that because of this bearish candlestick. Yesterday's market sentiment was also bearish, so was the day before. Yesterday was significantly bearish, and the reason why had to do with the attacks in Brussels. So everything really comes down to currency movements. Everything that happens from politics to terrorism to economic data. All of these can have an impact on the currency movements. But not only that, yesterday we also had a little bit of a negative, not negative, but worse than expected inflation reports from the UK. And in that anticipation, together with the Brussels attacks, we saw this massive movement, a bearish movement that corrected during the American New York session, but today we continue to have continued bearish sentiment. So with that, as I said before, again, we are going to do a Fibonacci retracement analysis. So right now we are almost at the end of March, and we have exactly 3 months until the referendum for Brexit. So within this 3 months, we're going to, as we said before, expect volatility. The main point that we want to keep an eye on is 154. And I'm 90% sure at the moment, based on everything that has been going on, that the pair before June 23rd could reach 154 one more time. So this could definitely be a scenario. We published about a Brexit on Investiva.com 2 days ago, and that is when I got into a bearish position, which was right about here. And I've been riding the bearish right now. When it gets to 154, if it's in April that we reach 154, we could expect the pair to go back up. But in June, as the Brexit talks get more and more heated up, depending on what the polls show. If the polls show, so these are the things that you really need to keep an eye on, right? So if the polls show the majority of people voting for a Brexit, that is when you can be more confident in a bearish scenario. Alternatively, if you look at the polls in May or beginning of June, and you see that majority of people are basically backing off and are not really in favor of Brexit and they want to remain in the EU, that could create an upward pressure on the British pound versus the major crosses. Same could be said about pound dollar. This is the pound dollar monthly chart. As we said before, it has already tested this very important level. For some reason, this is a pivot level that I had identified before, but 138, 139-ish as the current this year's lows. And if the pair does break below 138, that could be a really, really big deal, and that could apply even more bearish pressure on the pound dollar pair. But on the daily side, again, in the past 3 days, we have the formation of 3 black crows right over here. Therefore, we are reaching 140 again. 140 by itself is a very important pivot level that I had identified back in the day. I probably made this line last month during our webinar on global market overview, and it is reaching it. So chances are, because of the combination of a 3 black crow and the pair reaching the 140 level, tomorrow we could see a little bit of a pullback, and then the pair could attack again. From a volatility point of view, if you don't want to do a long-term investment in pound dollar and you want to basically right on the volatility, the points that you want to keep in mind are, you can actually use the Fibonacci retracement level. This is a little bit incorrect. I would bring it further high up. Doesn't really change it as much, right? And then we have this resistance level that we're going to try and bring down to, it's around 145. All right, I'm going to delete this one. I'm going to draw a new horizontal line on this Fibonacci retracement level. And we are going to paint it green because this is now a resistance. The orange lines, if you have been following my videos or you are a member of Investiva, you would know that I show resistance levels in green, pivot levels in orange, and support levels in purple. So you might want to take a screenshot of this right now. So these are the levels that you want to take an eye on. And if you want to range trade and just trade the volatility, this range could be safe, right? So trading between 140 to 144 right now, right about now might be a good time actually, especially if tomorrow morning you wake up and you see that the pair didn't break below 140, that could be a signal that the new bullish momentum has developed and you can get into a bullish position trading the volatility before the Brexit up to 144 and vice versa. So this is one of the strategies for shorter term traders that could apply before a Brexit happens. So we covered pound yen and pound dollar so far before a Brexit. Does anybody have any questions up until now? Otherwise, I will go over to the next question or next segment of the webinar, which is how to trade the British pound on the day of the Brexit. Not Brexit, but on the day of referendum. See if we have the slides over here. We don't. All right. So, okay. So we don't seem to have any questions up until now. So let's talk about the day of Brexit. First and foremost, please understand that trading a very risky day, such as June 23rd, is going to be incredibly volatile. It's going to be incredibly risky. So if you want to trade, you need to understand the risks involved on that day. It's going to be a ton of volatility and nobody really knows what is going to happen. All right, so these are all forecasts, and the reason why sometimes it is better to trade before a risk event is because the market is already moved based on the anticipation. And more often than not, when the news actually comes out, the market moves in the opposite direction and nobody thought about it. And that is when we say the market had already priced in the results. That is when, for example, let's say when the Fed was talking about in the US, when the Federal Reserve was talking about increasing the interest rates, the US dollar was getting stronger and stronger and stronger, and you can see, well, British pound dollar pair itself also was going further and further down. It was specifically vivid in dollar CAD as well as dollar yen. that up move, right? But what happened is when the Fed actually did increase the interest rates, the US dollar started to get weaker because the market had already priced a very high price for the US dollar and the anticipation of a Fed of a rate hike. And when it actually did happen, the markets were like, oh, okay, whatever. Now we're going to go and move on to the next risk event. The hot topic, obviously, right now is Brexit. So again, as I said before, we could expect a ton of downward pressure on the British pound until June 23rd, but on the day of June of the referendum, this could completely change. All right, and so there are going to be two scenarios, right? So the first scenario is if the UK, so yeah, we have it written over here, right? So expect the downward pressure to continue until June 13th. And if the first scenario on the day is that if the majority of the British people votes for a Brexit, and in that case, initially, we could see a jump. I'm sorry. Let's talk about this one as first one. So let's go in order. Let's say if the majority voted for the UK to remain in the European Union. So initially, we could obviously see a jump because that is good news for the people who are fearful of a Brexit and the impact that it could have on the UK economy. And if you are planning to trade on that day, you can wait for the news. If you hear nay for a Brexit, you could get into a short-term bullish trade and day trade it or whatever. So that could be one scenario. After that, the British pound will go back to focusing on the UK economy for a change, and that could also apply more upward pressure on the British pound because the Brexit risk is off, and the UK economy hopefully is going to continue doing well, and we could see an upward pressure on the British pound even after that, which I will get into in a little bit. But what happens in case the majority of people vote for a Brexit? So the immediate after effect, right in that moment, we're talking about moments right now. We're not talking about long-term trades. So if you're awake and you're in the London time and you see the news and the results come positive for a Brexit, the immediate after effect within the first 4 minutes or so would be a downside. And then, so these are all, again, anticipations of what could happen. And then we could expect the Bank of England to try and calm the investors down probably in a couple of days or so, or maybe even in their speech right after the referendum. And they might signal an interest rate hike, which would boost the UK economy as well as the British pound strength, or maybe they will even announce an interest rate hike right there and then, or something in that nature to calm the markets down because, well, after all, I mean, volatility is good for forex traders, but politicians normally are not really in that favor. So as I was saying, so that is, again, on the day right after a Brexit announcement, how you could trade the British pound. All right. So one of the reasons why I came up with this analysis or strategy is that, for example, last week, right? Last week we had the European no, it wasn't last week. It was actually 2 weeks ago that the ECB announced, look what happened over here, right? We can expect the same sort of thing happening. So the ECB This is monthly. We want the daily. This is the day that the ECB, this candlestick right over here, is the day that the ECB announced a negative interest rate. So a rate cut, which has a very downward pressure, implies very downward pressure on the euro. And what happened is, wow, look at this candlestick. It dropped from here, 111 to 108 in less than an hour. And then what did Mario Draghi, the head of ECB, do? He became very, very dovish, and he said, oh, we're not going to do anything like this ever again, and this was the last of it all, and don't expect any more interest rate cuts to come up. And guess what? The euro started to go back up, and it actually eventually closed and finished the day in a bullish candle, in a positive territory. So that's how much effect and how much volatility you can expect on the day of the referendum on June 23rd. So initially, again, we are saying this could be very similar to the scenario that the polls come in positive for a Brexit. Initial reaction could be to the downside, both in all pound crosses, especially pound yen and pound dollar. Pound euro could be a little bit different. I will talk about it in a little bit because euro and pound are positively correlated, and whatever happens to pound could happen to the euro as well. So that is a little bit more tricky, and I actually would recommend to avoid pound euro trading because this affects both euro and pound. This is not concerning only the UK economy, but it also concerns the European economy as well, right? So with pound yen, pound dollar, or any other pound crosses, pound Aussie, Aussie pound, Kiwi pound, pound CAD, those could be my choice of trading during and before or after the Brexit. All right. So, and this is what you can expect. So, for example, right before, this is going to be a betting, right? So if you want to get into a position before the referendum outcome comes out, that is going to be basically on your own. There is absolutely no scientific analysis behind it if you want to get into a day trading position right before the announcement. But at the moment of the announcement, if the results is positive and there is going to be a Brexit, you can jump in a bearish position and just go down with it up until the time that you see is starting to move back up, and that is when you want to cut your losses short and you want to get out. All right. So that is one scenario on the day in case of a Brexit. In case of a non-Brexit, you could probably do the opposite. All right. So that was during Brexit. 2 scenarios and 2 recommendations. What could happen after the day of the referendum, June 23rd? Again, we have two scenarios, and I briefly already touched upon it. If there is going to be a Brexit, that is going to create a ton of volatility, but most likely than not, the UK is going to try to calm down and is going to try to boost the economy somehow. So again, this is going to be a very, very long-term anticipation. We might have a webinar by then one more time, but depending on what David Cameron does, I would say that we could see an upward movement or even ranging in the British pound. Actually, either way, in case of a Brexit or no Brexit, the possibility of an upward pressure would be higher, not only for fundamental reasons, but also technically, because by then we probably could see a lot of bearish movement, and the pound could has probably moved really down towards our support levels, British pound versus the Japanese yen, could even break below this level, this 50% Fibonacci level, and could have even reached 148 or something. We don't know. But for technical reasons, and we have exactly 3 months after that, we could also see a little bit of a pullback right after a Brexit. Again, these are all anticipations. I'm assuming, right? Let's make this clear. Based on the facts that I have today, I am assuming bearish downward potential to be higher on pound crosses. And I am assuming that regardless of an outcome of a Brexit, we could see a correction in the pound crosses after June 23rd. Once again, I am assuming these are all comments, and the risk at the end is going to be on your own shoulder, whether or not you would like to take this risk or not. Personally, I would rather trade this beforehand, and on the day of the referendum, I would probably avoid getting to the market because of the volatility. But at the same time, this volatility could, if you're lucky, and a lot of times, a lot of people, especially first-time traders, could be lucky, that could create a lot of potential and opportunity for you to make profit on the day. All right. So we have a question. Are the slides going to be available after the webinar? Well, the webinar is recorded, and I assume you can find it on orbx.com. Also, you can read, actually not on education, you can read my full analysis on Brexit on investiva.com. If you're not a member already, definitely do sign up for free on Investiva. And I wrote this 2 days ago, and the followers and the students are already making profits based on this. So yeah, so basically whatever I said is written over here as well, so you can definitely take a look at that and more. All right, so let's see what the next slide is. Oh, I did promise you to take a look at pound euro, and I am going to keep my promise. So we are going to open a new chart over here and found the euro pound on the candlestick. This is my Orbx platform. We need the candlestick chart on the daily basis. We want it to be a little bit more visible. All right, so as I said, pound yen, you see, this is completely different than what we saw in pound yen, for example, or pound US dollar. First of all, well, the main reason why is that the euro is quoted first in this pair. So the bullish position includes strength in euro and weakness in pound. Vice versa, a bearish position includes weakness in euro and strength in pound. We have had 5 consecutive days of bullish movement in euro pound, which indicates that the euro has been very strong and the pound has been very weak, which is pretty interesting because when you look at euro dollar, the euro actually has been very weak versus the US dollar. So pound euro can normally be very, very tricky because both of these currencies, euro and pound, are in the same in the same This is the daily chart. So for the past 3 days, we have been seeing this. They're both in the same zone, the Eurozone versus the British pound, and they're very closely correlated. And recently, we've been seeing a little bit more of an up move in the euro, which is, again, as I said, a little bit, the fundamentals don't really apply in this case, because they're, if you imagine two currencies dancing in a pair, they're very, very compatible, meaning they're moving in the same direction. Slightly the euro is stronger than the British pound, but in case of a Brexit, the euro can also be affected. So we could see a range, or it really depends on which one is going to be stronger. So there's going to be a gauge. It's not really like, oh, okay, pound is getting stronger or euro is getting stronger. It's going to be a gauge of what percent, how much is euro stronger than the pound, and how much is Brexit going to affect the UK versus the euro. And for that, you really need to get into the nits and grits of their economy, the percentage of their export and import are really affected, and the analysis could be way more complicated. And that's the reason why, actually, for now, I haven't been taking a position on euro pound. But what we could say technically, and looking at this, you see, so when it really actually started, it was mostly ranging, but then in 2007, when the crisis happened, euro somehow got really, really strong, and British pound got really, really weak against it, and then we had ranging going on, and we have this cycle now looking to confirm. So some of the levels that you do want to keep in mind, you see, so the historical range level, which is 0.66 right over here, we have the lows of, this is our pivot level, which I'm going to paint in orange. And then we have the resistance levels that today we actually have seen it, this month we've seen it broken above. This is our resistance level in the long-term point of view. All right, another way that we can create more levels for this is using the Fibonacci retracement level. Well, almost. And so this is, again, as you can see, of the 50% falls directly and right on the resistance level that I identified before, and the pair has actually broken above this month, which is pretty interesting, because not only we've had 3 black crows, we've had 4 black crows. So we have 8 days, 5 business days remaining in March. I'm very interested to see if the pair can actually finish the month breaking above this level, or it's going to start going down. All right, so these are the levels in the long term for euro pound. And finally, for those of you who came here in the middle of it, again, this is what I look like, investiva.com. Definitely please do follow me on Twitter at Kiana Danielle, at Investiva. Kiana Danielle brings you more personal tweets, while Investiva is all about trading and investing. Again, on Facebook, we also have 2 pages, my personal Kiana Danielle page and Investiva. I have a lot of videos on Investiva, the Investiva's YouTube channel. And for beginners today who are struggling a little bit understanding the technicals and fundamentals and market sentiment, I have talked about in my best-selling book, Investiva's Guide to Making Money in Forex. Is available on Amazon. It's published from McGraw-Hill. It was out 2 years ago, actually. So definitely go and buy this. This is your handbook that you're always going to need when it comes to forex trading analysis. Once again, thank you so much all for joining me. We have many participants today, so thanks again, and I hope that you will be able to trade responsibly and make a lot of profit right before Brexit happens. Next week we have another webinar coming up, so I'm hoping to see you there soon as well. All right, everybody, have a great night. I'll see you again.